Hello everyone, and welcome to this presentation of the correct way to trade with candlesticks. Welcome, my name is Primo. I am the president and founder of Specialist Trading, and in today's presentation I'm going to share with you and reveal what I feel is the best way to trade candlesticks. By just applying a simple technique, you'll be able to really increase your odds for success in trading virtually any candlestick pattern or any candlestick type of strategy. Well, welcome once again. I'm the president and founder of Specialist Trading, and for those of you who aren't familiar with my website, we are first and foremost an educational company. In other words, we really want to educate you with all of the tips and techniques that I've accumulated in my 38 years of trading. I started out my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. That's where we get the name Specialist Trading. Now, for those of you who aren't familiar with what a specialist was, doesn't mean that you're any more special than any other trader. But in those days, if you've ever looked at the old pictures with the people screaming and yelling on the floors with all the paper covering the floor and people making all these hand signals, the gentlemen behind those large podiums, wooden podiums, were specialists. In other words, that they specialized in anywhere from 30 to 50 stocks. If you wanted to buy or sell a particular stock, you had to go to the trader who specialized in those. And each one, as I said, had about 50 stocks roughly. Now, while I was a specialist, I traded through the crash of 1987. I traded through the bull market that followed after that. And I've seen and traded and heard just about everything imaginable that there is out there, any technique, any strategy, any system. I've traded through quiet markets, through rangy markets, through straight up, straight down markets. So I know what works. By working, I mean what has a level of consistency and what doesn't. So roughly, I left the floor in the mid-90s to manage money to pursue my own trading, and roughly about 7 years ago I started Specialist Trading, where all I do is teach and mentor my students all of the things that I've accumulated. What we try to do is pass along this knowledge so that you can formulate your own trading plan. Even though we provide our members with strategies and signals for the strategies, it's more about teaching you so that you can empower yourself as opposed to relying on someone or something to tell you what to do. It's our opinion that the majority of traders fail because they're either going to a chat room or going to some site where it tells them what to buy, what to sell, or taking all their signals from the news or for someone on TV. And it's my opinion that that's the reason why most traders fail. Once you take back your power and you make your own trading decisions, then you'll get on that road to consistency. So that's why we are really stressing education and teaching with Specialist Trading. Now, as I stated, I'm going to show you a great technique for trading the candlesticks, what I believe is the correct way to trade candlesticks, and I'm going to show you a lot of performance results. But please take a moment to view our disclaimer because I'm going to show you a lot of results, but remember that we can in no way guarantee that any of these results will be repeated in the future. We're required by law to show you this, so as you're taking a moment to view our disclaimer, I would also like to take this moment to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to write that down. I post a lot of great free information on a daily basis, anywhere from daily financial wisdom, tips and techniques I've accumulated over the years, to actual signals that our members are currently in. In fact, over the weekend, I actually posted a signal that was generated to go along the E-mini, go along the market. And as you see, we had a really nice rally yesterday coming into today where on average, each one of the members who took the signal could have averaged about 30 points in the E-mini. That's about $1,500 per contract. So that's posted a lot of great information, not only in the E-mini, but also in stocks, as well as the Forex markets. So follow us on Twitter. I also would like to extend one more invitation. I'm really excited about this. This is coming up very soon, next month in May. This is the Trader Bootcamp, and the Trader Bootcamp is really amazing. It's a live 2-day event where you'll learn what it takes to be a successful trader. You're going to have a lot of speakers, a lot of trading experts that are going to teach you many things such as stocks, options, futures, Forex, and even taxes. Yours truly will be actually speaking about futures trading. This is going to be May 11th and May 12th in Las Vegas, and it's going to be at the MGM Grand Hotel. So I know a lot of you are members or have seen me speak, but only through the internet and through my webinars. It would be great to actually meet you in person, to have a cocktail with you and talk over trading ideas and things in person. So I really look forward to meeting a lot of you. Here's the best thing about this. Trading Winds, who is putting on this 2-day bootcamp, has been kind enough to offer our members a deeply discounted rate of 75% off the ticketed price. So if you act now, you can actually get 75% off simply by saying you're a member, or at least someone who has come to see our webinars through Specialist Trading. So if you look below, that's the link where you want to get all the information. Remember, this is the trading event of the year. It's a 2-day boot camp. Learn everything you need to absolutely know to crush the markets in 2015. I'll give you a second just to copy that link at the bottom just to get all the information about that. Remember, it's a 2-day event, May 11th and 12th in Las Vegas. 7 trading expert speakers, yours truly included, going to be speaking about the futures markets, but there's also going to be speakers talking about stocks, options, Forex, and even taxes. There's a lunch and cocktail reception, a panel discussion, and it's all being held at the beautiful MGM Grand Hotel. So you owe yourself a 2-day vacation as well as getting some great knowledge from a lot of expert teachers and traders. Okay? So I hope to see you there, and remember, don't forget about the 75% discount. Okay, so let's begin today's presentation. As I stated, I used to trade on the floor, but I've made no secret about this. My first year or two, I struggled tremendously. And as I stated, the reason why is because most traders struggle, myself included, is you're trying to take your signals from outside sources, conventional wisdom, systems, strategies, things that really show no levels of consistency, but for some reason we've been taught that are supposed to work. And it's no different with candlesticks as well. So this is why most traders fail. I'm here to show you what works with consistency. And we want to keep things as simple as possible because over the years I've learned that simplicity equals consistency. So you'll find out the more presentations and ultimately when you become a member and a student of mine that our methods are extremely, extremely simple. In fact, you'll probably be amazed at how simple this is today, but how well it works. And you can go back and do your research and see that it does work extremely well. So remember, keep things as simple as possible. Simplicity equals consistency, and that's our aim at Specialist Trading. Now, before we begin, a couple of things. I'll take questions at the very end of the class, okay, because this is an educational class. So if you do have any questions, please wait till the very end to ask any. I see some people have probably already asked questions, but please wait till the very end because there's a special box I have to open up here, and I won't even open it up till the very end, so I won't even see your questions to be answered. Many times if you wait for the next slide, your question is answered, so kindly wait for the next 20, 25 minutes, and then we'll conclude and spend the last 15 minutes for any questions, okay? I will say that the one most popular question is this being recorded? And yes, it is. We record all of our presentations, so you can contact Pro Trader Strategies if you have to leave early or if you're having technical difficulties, and they will send you a link to this recording, okay? All right, so let's begin, and let's first give a refresher course about candlestick patterns. I would say that the majority of people either use or have in the past applied some type of candlestick patterns to their trading. And let's look at what are the most common. Anywhere from a doji to a piercing line, a shooting star, an evening star. These are probably the most common candlestick patterns, okay? And let's look at the most popular. Probably the simplest and most popular candlestick pattern are engulfing patterns, as you see right here. As I stated, just a brief refresher course for those of you who haven't traded them or not familiar with engulfing patterns. It's a 2-bar pattern. And in this case, a bullish engulfing pattern has the first day where the open to close range is lower, is down in other words. It's a down day. The next day, the open to close range is higher. And what you want to see is the open to close range, not the extreme high of the wick or the extreme low of the wick, but just the open to close range engulfs the open to close range of the lower day previous to it. Okay, it's a 2-bar pattern. And so this open to close range totally engulfs the previous day's range. And when you see that, conventional wisdom tells us that you're most likely going higher, okay? Now you'll see the same thing with a bearish engulfing pattern just flipped upside down. Bar number 1 has an open and then closes higher. Bar number 2 of the 2-bar pattern opens and then closes lower. So bar number 2's range from open to close totally engulfs the upward range of bar number 1. Remember, we don't need to engulf the highs of the wicks. That's not what we're engulfing. We're only engulfing the open to close range. That's a true engulfing pattern. Now, conventional wisdom, once again, tells us if you see this, well, you should have some type of a downward bias. Now, let's look at the standard definition for engulfing patterns. The engulfing candlestick pattern is a reversal pattern usually occurring at the top or bottom of a trend. So in other words, if you have a trend that's moving higher, conventional wisdom tells us to look for a bearish engulfing pattern, a reversal to tell us that the trend has stopped and that we're now going to go lower. Conversely, if the trend is going lower, heading down, we're looking for a bullish engulfing pattern, a reversal pattern telling us that the downward trend has ceased and now we're going up. This is the way we're all taught. This is conventional wisdom, and this is what most traders apply when they're using engulfing patterns. Now, if we look at this example here, this older example in CVX, we see here that obviously we've been heading lower. So we are in some type of a downtrend, right? Now, once we're in a downtrend, what does conventional wisdom tell us? It tells us that we're looking for a reversal pattern, in this case, a bullish engulfing pattern. And what do we have right here? A bullish engulfing pattern. Bar number 2, the range from open to close totally engulfs bar number 1's range from open to close, which is down. So this is a sign to buy. So here's what most of us have done, I know myself included. What you do is you jump in and you buy, because after all, that's what you've been taught, all the seminars, all the books you read, and then look what happens, okay? Does that look familiar to anyone? But let's just say you think to yourself, well, maybe I jumped the gun a little bit too soon. I got in before the downward move had concluded, and now guess what? Here's the real bottom. Here's the real reversal. There's another bullish engulfing pattern. So that's the bottom. So I'll jump back in, and I'll probably make all my money back because this is the real bottom. So you jump back in and you buy some more, and then look what happens, okay? Look familiar to anybody. This is the way most people trade candlestick patterns. They're usually used as reversal patterns. But we have to ask ourselves, that will work. It actually does work, every once in a while. But remember, this is the way I used to trade on the floor, and it would work until it stopped working. And after a while, I had nothing to show for it. So how do we increase our odds for success? What is the correct way to trade with candlestick patterns? Well, candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. You see, this goes against everything you've been taught. We've always taught that they're reversal patterns. And once again, there are some traders that do very well trading them as reversal patterns, and every once in a while they will work fantastically, okay? I'll see them every once in a while. But remember, we're not looking for home runs at specialist trading. We're not looking to sell at the top and buy at the bottom. We're looking for consistency. Remember, we said that consistency equals simplicity. In other words, consistency is the only thing that will sustain you. Not picking a top or picking a bottom, because after a while, you'll run into a series of losses where you give everything back. What we're looking for is consistency, and you will have a higher level of consistency trading any candlestick pattern if it is in sync with the trend. All right? Here's the only problem with that is that everybody has a different idea what the trend is. So, what's our idea of the trend? Over the years, the single most best tool that I've used that really determines the short-term trend is the PET-D. And what this is a formula, an algorithm I was showed on the floor some 30 years ago. And we had to figure this out by hand. We could only use it on daily bars because it was kind of cumbersome to figure out. It wasn't difficult, but you had to look at some momentum tools, and then finally you came up with a number to tell you if the trend was still up or had changed to go lower. But now, with high-speed computers and programmers, we were able to turn it into a color bar algorithm. So here's what we've done. When you see a series of green bars, the short-term trend is up. The PET-D is telling you that the short-term trend is up. And when you see a series of red bars, well, the short-term trend is down. That's how simple it is. Okay, so now we know by applying the PET-D what the true trend is. So all we have to do is be in sync with the trend, and we'll have a higher level of consistency with virtually any trading any candlestick pattern. All right, rather than trying to pick tops and bottoms the way we've been taught, and the way I learned over years, really there's no consistency to it. It's better to trade in sync with the trend. So here's the rule we're going to use when trading candlesticks. Now in this case, we're only going to be concentrating in this educational webinar on bullish engulfing patterns. This will virtually work on any candlestick pattern, but we're just going to concentrate on bullish and bearish engulfing patterns because of the time allotted we have. So here's what we want. Remember, engulfing patterns are a two-bar pattern. So the rules are we're only going to buy if the engulfing bar, that's bar number 2, or if both bars are colored green. this is our signal that it's an okay trade to take. It's a valid trade. We have confirmation. Now, conversely, for a bearish engulfing pattern, we're not caring if the trend is up and then we're picking the top. We don't care about that. We're only going to sell an engulfing bar, a two-bar pattern, if bar number 2, the engulfing bar, or both bars are red. That's it. That's how simple it is. So that's all we have to do. And remember, we can apply this to any candlestick pattern, a doji, a piercing line, a shooting star, just as long as it's in sync with the trend. So let's look at some examples now just to show you how consistent this is. Let's start out with some stock examples for all you stock traders. Here's a chart in Urban. Okay, this was coming into roughly about a month ago in March. Now, obviously, the trend is up. Okay, now if you're looking at, remember, we're only going to be looking at engulfing patterns for the sake of this webinar. Now, looking at this in hindsight, we see here that we have 2 bullish engulfing patterns circled in green and 1 bearish. Now, conventional wisdom would tell us, the trend has been up. We're looking for reversals because bullish and bearish engulfing patterns are reversal patterns. So if we've been going higher, you want to take the bearish engulfing pattern, the one circled in red, because most likely it's signaling the end of a trend. So if you had followed conventional wisdom and sold into that, look what would have happened. Okay? Didn't work very well, did it? Remember, this will work every once in a while, but when it doesn't work, as in this case, you wind up giving everything back you made on the few times it did work. So obviously, it would have been much better to take the bullish engulfing pattern setups. But how could we have known? Well, we just simply apply the PET D, and remember, the PET D needs to have either the second bar or both of those bars colored green, and guess what? They were both colored green the entire way. In fact, the bearish engulfing pattern was colored green as well, telling you not to take it. So you see how simple this is? Now you have the assurance and the confidence to trade with candlesticks knowing you're in sync with the trend. All right, now let's look at the next example here. This is letter K. Okay, obviously we've been going in an uptrend. If we look here, we see we have a bullish engulfing pattern. Well, if we apply the PET D, see how simple it would have been just to take that trade? You wouldn't have had to question it because both bars were colored green. And you had, after you would have taken that trade, a nice 2 or 3 point move to the upside. Now, as we got up higher, we started to roll over. And guess what? One of those bars was red, and this was a bearish engulfing pattern. So look what happened. Now you had confirmation to go the other way. Either you could have exited your long, or if you're aggressive, you could have gone short. How about Amazon? Okay, this was coming into February a couple of months ago. Now looking at this, someone would say, well, there's kind of a slight upward move, but kind of nothing is happening. We're in a ranging market, not enough data here to tell us what to do. But if we look, there's a bullish engulfing pattern. So how would we have had the confidence to take this? We simply apply the PET D, and we see that bar number 2 is all that's required to be green, and it is green. So you could have taken that long trade right there, roughly about 300, 310. Now remember, I know this is expensive stock, but you could have applied this to options. We have many students at Specialist Trading that simply take the signals and buy a long call or a long put. So you would have gone long right here, and nothing really happened. It went up a little bit for all intents and purposes. It was just kind of going sideways. So you're starting to get a little antsy, and then lo and behold, you see a bearish engulfing pattern right here. Now normally you would take that. But guess what? Both of the bars are green. Remember, in order to go short, we need bar number 2 at least to be red. And none of the bars are red. So you would totally bypass that, continue to stay long, and it would have been a good deal because the stock went up 80 points in the next 2 weeks. You see, the bullish engulfing pattern has a high level of consistency when it's in sync with the trend. How about CVX? This was the example we showed you earlier where we originally were trying to find the bottom of a trend reversal pattern with bullish engulfing patterns. This is where we originally wanted to buy. Now, had we known about the PET D, we would have had to have at least one of those bars colored green. Once we apply the PET D, we see that all the bars have been red. There's no business we have at all even thinking about a reversal pattern. So the market went straight down. But then again, we had the second bullish engulfing pattern. Okay? Any of the bars colored green? No. So we had no business even considering buying it again. So many times, not only will the PET D as well as the bullish engulfing and bearish engulfing patterns give you great setups, but many times the PET D will keep you out of trouble. So some of the best trades are the ones that you never take. So we would never have had a setup here because none of the bars were colored green. How about Boeing? Okay, this was once again a month or two ago. As we see here, all of the bars are green. So this means we're not even going to consider going short. Even though it looks as if we're kind of in a rangy pattern here, we're only going to look at these bullish engulfing patterns. They're giving us a sign. Remember, not an outside source, but the market itself is giving us a sign that the trend is up and most likely we're going higher. So that's all you need to know. And look what happened. The stock went from 132 to 148, roughly 15 points in the next 2 or 3 weeks. How about VLO? In the beginning of this chart, we were headed lower. All the bars were red, and then ultimately the trend changed. You see how quick the PET D is able to discern that we are now in an uptrend. On this bar, it turned green. Okay, so now we know that we're headed higher, and lo and behold, it did. It started to go up much higher. So looking back in hindsight, how could we have taken advantage of this nice swing from roughly 12 points higher? Well, look at these bullish engulfing patterns along the way. Sure, we wouldn't have caught the bottom, but remember, we're not looking to catch bottoms and tops anymore. We're looking to be in sync with the trend to give us consistency. XLNX, the majority of these bars turned red, so we want to be in sync. That means we're only looking for bearish engulfing patterns. We're in no way going to try and pick a bottom the way conventional wisdom has taught us. So we look for bearish engulfing patterns. Well, there's two right there. You could have taken your pick of either one, roughly around 44, and look what happened. The stock went down roughly 6 points in the next couple of weeks. MOS, now just off-site, looking at this, someone would say, well, Steve, there's no real trend here, so I guess I'm not going to do anything. We're just in a range from 45 to 47. Well, we see that there's a bullish engulfing pattern. So someone who doesn't have the PET D would say, I'm not going to trade this because I don't know if we're in an uptrend or a downtrend. We've just pretty much been going sideways for the past month. But remember, all we need is for bar number 2 to be green in order to take that signal. So if you were lucky enough to be a member of ours and have the PET D, you see that, guess what? The second bar was green. So that was your confirmation. Even though it looked like we're going just sideways, the market was telling us, no, we're going higher. And this bullish engulfing pattern, along with the PET D, is a high-level setup. So you could have gone long, and look what happened. Okay? How about GLD? This is the ETF for gold. Now, this was coming into February. Gold was going lower. A lot of people were looking for some type of bottom, some type of a bounce. Obviously, the trend was lower. And at this point, we are met with a bullish engulfing pattern. Now, this is where the way we've been taught, conventional wisdom has always told us, well, we're in a downtrend. It's safe to say we're in a downtrend. And we've made some type of bottom. Perhaps this is some type of Fibonacci level right here, or maybe this is where all the support is, the volume, or the software purchase said this is great support. And after all, a bullish engulfing pattern, I've always been taught, is supposed to signal a bottom. So this is a high level buy setup, right? Well, not really, because in order to be high level, the second bar or both of those bars would have had to been colored green. But the PET D is telling us, no, this is a downtrend. Stay away. And you would have saved yourself a lot of money and sleepless nights by not purchasing that. See, conventional wisdom, for some reason, the masses think that it works, but if it did work, all the things we were taught, then 80% of all traders would be successful. But unfortunately, it's the other way around. 80% of traders are unsuccessful. It's because there really is no consistency with what we've been taught. And I know this from firsthand because this is the way I used to trade. On the floor, I struggled tremendously my first year or two. But my mentors were lucky enough to catch me in time before I blew up entirely. And they told me to strip away all this conventional wisdom because there's no consistency and just learn to simplify my trading. How about crude oil? Here's an older chart of crude oil. We all remember at the end of last year, coming into the beginning of this year, that crude oil was going straight down. So many traders lost money trying to pick a bottom because we're always been taught, you know, something is going lower, something is hit tremendously oversold levels. You've got to buy it, right? And it continued to be oversold for weeks, if not months, and people continued to lose a lot of money. But as we see here, the PET D was signaling months in advance that this is in a full-fledged downtrend to stay away. In other words, you'll get consistency by trying to be in sync with it as opposed to trying to pick a bottom. So therefore, if we're being in sync with it, what do we want to look for? We want to look for bearish engulfing patterns right here, okay? Look at all the signs that the market was giving us to go short. All right? Forget about news, forget about what's going on globally, forget about economic conditions. All you have to do is learn how to listen to the market because it pretty much tells you everything you need to know. The PET-D was telling us the trend is down, and the engulfing patterns, which are a signal of what the market's doing, was telling us we're most likely going lower. So that's a high probability setup. So look what happened. We all know what happened. All right, so that was stocks, ETFs, and commodities. This will still apply over to the E-mini S&P. Let's look at some other charts and different time frames. If we look at a daily chart of the E-mini, this was going back into February, we see here that we were met with a bearish engulfing pattern and a bullish engulfing pattern. Which one do we take? Or, well, this one actually did work very well. It doesn't seem like a lot, but it was a good 30 or 50 points to the downside. But how did we know whether we should take it or not? Well, we need either one of the bars or both to be colored red. And for this one, we need one or both of the bars to be colored green. If we apply the PET-D, we see here that bar number 2 fulfilled the requirement. So you could have gone short and made a good 30 to 40 points to the downside. And on this one, both bars were green, so that was confirmation enough to go long, and look what happened. Now this is on daily bars. You could have traded options with those and just gotten in and out rather quickly, but if you're like most people who trade the E-mini like to trade intraday. So here's a chart from last month, a 10-minute time frame. Now obviously, just looking off this face value, the trend off the opening of the day is up. Okay, so we see here that we're met with 2 bullish engulfing patterns. Now you wouldn't have to have the PET-D to know to take these trades because obviously the trend is up and these are both buy setups, so you want to take those. But just for assurance, you apply the PET-D and you see yes, they're all green, giving you the confidence to take the trade. So you could have gone long roughly about 1922, and the market went up a good 5 points. That's a nice move actually in roughly about 30 minutes, but started to pull back and sell off. Now at this point, most people would exit and say, well, we've topped out. But look what happened. The entire time the market sold off another 5 points, we stayed green. And as well, we had another bullish engulfing pattern. So had you not taken a quick trade and exited with a nice 5 or 6 points, you could have gotten back in as well and went even higher. Now, as you went higher, the bars still remained green. You were met with a bearish engulfing pattern. This is where most people would say, well, the market's probably had a great run. I'm going to get out. But remember, we need to have bar number 2 colored red, at least in order to take this sell signal. So conventional wisdom would have told us to get out. But knowing the PET-D, we stay in, and look what happened. See how simple this is. Once you're in sync with the market, you'll be much more consistent than trying to pick tops and bottoms. Trading tops and bottoms works for some traders, probably about 1 to 3% of all traders. But for the majority of us, myself included, it's a recipe for disaster. It's much easier to make money and to be consistent, to be in sync with the trend. And the PET-D is the best thing I know for getting you in sync with the short-term trend. Now that's a 10-minute chart. Here's a tick chart, an older tick chart of the E-mini. As we see here, we are pretty much going in an upward trend, and we have 3 bullish engulfing patterns, okay, or I should say 3 engulfing patterns. We have the ones encircled in green are bullish, and the one circled in red is a bearish. Which one should we have taken? Well, it's simple. You don't have to sit there and worry about it. You just apply the PET-D, and as we see here, all the setups are colored green. Even the first one, bar number 2, is colored green. So that means we should only be looking for long setups. So we would have bypassed the bearish engulfing pattern and taking the bullish engulfing patterns. And look what happened. And as the market continued to go higher, you were met with a lot more signals to jump in as well. So you're long, you continue to stay long, you've got a great profit now, and right here you have a bearish engulfing pattern. But once again, remember, we need bar number 2 to be colored red. It's green, so we do not get out of our position. We've got roughly, at this point, if we had taken the first signal down here, we've roughly got, almost, I'd say about an 8 to 9 point gain here to the upside. But now we stay long, and look what happens. The market comes lower, and we've got another bullish engulfing pattern. So the market is telling us it's most likely going to go higher. So we continue to stay long in the position until here. We have a red bar, our first red bar, in fact, until all the way back here. That's not enough just to get us out, just because we see a red bar. But guess what? It's bar number 2 in a bearish engulfing pattern. Remember, Either both bars or bar number 2 needs to be colored red, which it is. So that's our signal to get out. Okay, we've got about a 5 or 6 point gain. It's been a nice run. So if you're a conservative trader, you just could have exited your long position and said, thank you very much, that was a nice trade. And if you're an aggressive trader, you could have exited and then gone short. And it would have been a good thing because look what happened. You see how the PET D is such a great tool for identifying the trend, many times in advance before a big move. Now let's look at the Forex markets because you'll see the same phenomena in the Forex markets for all you currency pair traders. Here's a chart of the dollar yen, a daily chart, an older chart from last year. Obviously we're in an uptrend. Looking back with the PET D, all the bars have been green. So there's absolutely no question that we're only going to be going long. We're not going to try and pick a top. We don't care about reversal patterns. We only care about being in sync with the trend. Since the PET D is telling us the trend is up, we're looking for bullish engulfing patterns. And look at all of the signs, all the different clues that the dollar yen gave us to go long. So see, the market is always screaming and giving you opportunities to jump on board. All we have to do is listen, learn what to look for, and then just jump on board. And it went even higher after that. Conversely, we see a euro-dollar chart here from last year. Obviously, the trend was lower, where most people would like to look for a bottom. We apply the PET D and say, hey, all the bars, the majority of bars are red. We're not going to try and pick a bottom at all in the euro-dollar. We're just going to go in sync and sell it. So we see here that at the very top, we had 2 bearish engulfing patterns at the very top of the sell-off. And later on, we had 2 bullish engulfing patterns. Well, this is where most people would say, boy, that was a great trade. Time to get out because most likely these bullish engulfing patterns are signaling that we are going to reverse. Because after all, this is the way conventional wisdom teaches us to trade candlesticks as a reversal pattern. But since both bars are red, we know now that we're skilled traders not to fight the trend. So therefore, we would have stayed short. And look at the entire way down, we had another bearish engulfing pattern to go short. Here was a bullish that most people would have probably tried to pick another bottom and then lost a lot of more money. And then we have more signs to get back in short. So once again, we're looking for consistency. You will not find consistency. Take it from firsthand experience. You will not find consistency trying to use reversal patterns, which is another way of saying picking a top or picking a bottom. There's no consistency in that. As I stated, there are some great traders that are able to do that, but they're maybe 1 to 3% of the entire universe of traders. The rest of us find it extremely difficult. That's why the majority of traders fail. It's much easier just to be in sync with the trend. So let's recap before we go to the question and answer portion. Only buy or sell candlestick patterns that are in sync with the PET D, all right, in sync with the trend. Do not try to pick tops and bottoms. Do not use them as reversal patterns. Conventional wisdom has taught us that that's the way they're supposed to be applied, and I know you've gone to seminars and gone to webinars and even bought courses where they teach you that. But trust me, in 38 years I found no consistency trading candlesticks this way. I found tremendous consistency trading candlesticks in sync with the trend, and the best thing I know for trading in sync with the trend is the PET D. Okay, so points to remember, and these are extremely important, extremely important. What we just shared with you today is an entry pattern or just a setup. This is not a complete strategy. I do not want you just to, all of a sudden, your eyes are lighting up and go, boy, I'm going to start looking for uptrends according to what I think an up or downtrend is, and start looking for, candlestick patterns. Well, that's a good place to start, but it's just all we showed you was a valid very high probable setup, but it's not a complete strategy. In order to have all the pieces of the puzzle, because we just shared one of the pieces of the puzzle with you today, we need to talk about stop placement. We didn't talk or tell you anything about where to place your stop, because sometimes it will be a negative trade, and we're not going to sit here and promise you that every trade is a winner. It's more of a 2 steps, 1 step back approach, but still you will have to know about protecting yourself with stop placement. Also, we didn't talk about advanced entry signals. We didn't even discuss where to enter. We didn't discuss if you want to enter conservatively, if you want to enter aggressively. You have to have that also in place if you're trading this method. And lastly, we didn't talk about where you're going to exit. You could have taken a quick exit. What if you wanted to stay in long for the long haul? There were some tremendous profits to be taken if you stayed in longer, but how do you know how long to stay in? How do you know where to get out? We didn't talk about that at all. And lastly, we didn't talk about money management. How many shares should you trade? How many contracts? What's your account size be? So these are all extremely important pieces of the puzzle in order to trade this technique that I just shared with you properly. Now, I know a lot of you have been trading for a while, and you can probably come up with these answers yourself, but there are a good deal of you who have been burned by so many educational sites or so many vendors, and nothing seems to work. And so this is what we've done for all the people. We're having a special 2-for-1 attendee special. And what we're doing is we're throwing in one of our best and most consistent candlestick strategies, so strategy number 5, free, just for purchasing the Primo Early Trend Detector or the PET-D. So in other words, all you have to do is purchase the PET-D, and we'll throw you in all of the rules, entries, exits, stop placement, money management, advanced trading, conservative trading, detailed instructions, signal alerts. This includes both add-ons. In other words, you will get the add-on that will generate up and down signals when a buy setup has occurred or a sell setup has occurred. You will also get the add-on for the PET-D, which automatically colors your bars either green or red. Now, let me just show you some recent signals with candlestick strategy number 5 as well as the PET-D. This was in CRM. This was just about a month ago. As you see here, we were going higher and then looked like we were rolling over. Most people would have said, well, this is a sell-off, we're topping out, but strategy number 5 generated a buy signal on the 25th of February, okay? And guess what? The PET-D had colored all the bars green. So this was your confirmation to take the trade. And look what happened. The next day, stock went up 8 points, okay? Now, obviously, there was some news. Obviously, if you had waited the next day, you couldn't have taken this trade. But if you were trading using our aggressive method, you could have entered at the close of the 25th and taken advantage of an 8-point gain in one day. Now, there was some news that we didn't know anything about. No one called us up, obviously, and said that the stock was going to gap up 8 points the next day. It was all in the price, okay? This is, remember, if you keep things simple and you learn how to listen to the market, you'll see these things much easier than trying to discern or figure out when an announcement's going to be made, what the earnings are, what the jobless claims are. We don't care about those things. Let's say you had missed that and had not entered the trade. Well, later on, the market started to pull back and sell off. And once again, another signal was generated. This was just about 3 weeks ago with strategy number 5. Okay, so you could have taken this signal, and it was confirmed by the PET-D. And guess what? 4 points in 1 week. Okay, so that was just stock setup to go long. GoPro, a couple of months ago, issued a sell signal on the 4th of February. Had you taken that trade, another 8 points in 1 week to the downside. Now here's a great setup in BIIB. Now obviously this is a very expensive stock, $400 stock. Once again though, we have a great deal of students who only trade options. And they have no problem with our methods because they say, well listen Steve, once I get a setup to go long, rather than just purchase the stock or the future or whatever, I just buy options. That's okay. I buy long calls, maybe out of the money if I think it's going to be a real big move, such as this case. Someone looking at this would have said, well, there's no trend here, Steve, so I'm not going to do anything. This is where you need the PET-D. Because obviously, if you're trying to trade this, just going by face value, there's no trend here. But strategy number 5 generated a buy signal on the 13th. And someone would say, well, how can you do that? There's no trend. Well, it's not confirmed by the PET-D. Well, actually, it was. All we need is for the second bar to be confirmed, and if you had gone long on the 13th, you would have made 60 points in 1 week. Obviously, we're not saying that every trader made 60 points and would have taken that full 60 points, but this is just showing you the power of this strategy that you get totally for free just for purchasing the PET-D, and with the PET-D involved as well. Now, if you want to trade the euro dollar, remember we told you about how easy it is to trade. Well, here's starting at the beginning of the year. Obviously, the euro dollar has been in a downtrend. Look at all the signals to go short that were confirmed by the PET-D. These are all strategy 5 signals. And then lastly, let me show you something that happened yesterday. I know a lot of times people try to sell you or market things to you, and they show you examples that happened 2 years ago. To show you how resilient this strategy is, along with the PET-D, this happened yesterday. Now remember, there was a great move to the upside. But if you were trading, intraday trading the E-mini, the market actually opened lower and then started to move up slowly and then kind of just continued snowball to the upside, all right? So how could we have taken advantage of that? Well, if you had our candlestick combo, which is strategy number 5 along with a pet D, here's what you would have been able to take advantage of. Here's a tick chart of the E-mini from yesterday. If you look in the lower left-hand corner, you'll see this 4-6 on the very bottom. That was yesterday. Okay? So as we see here in this chart, the market kind of opened and then moved a little lower, then started to head upwards until it finally made a top roughly about 10 or 11 Pacific time and then started to roll over till the end of the day. Now, these were all the signals generated using strategy number 5. You would have had automatic indications telling you when a buy setup was occurring. Okay? Still, even though strategy number 5 is one of our most consistent candlestick strategies, you want to be sure. You want to have confidence to take the trade because we're not going to sit here and tell you that every trade is a winner. So all you have to do is apply the pet D. And once you know that your buy signal is confirmed with the pet D, well then you have the green light to go ahead and take the trade. So even if you had just taken this first signal down here, well that's a good 30 points to the upside you could have made holding on to the position until you were met with a sell signal and you could have had a nice 5 points to the downside towards the end of the day. So this was yesterday. This was on the 6th. This was coming into Monday. And you remember the market had a tremendous run up. You could have taken advantage of that using the strategy we're offering you today for free. So here's how to take advantage of this 2-for-1 attendee special. Remember, all you have to do is purchase the pet D and we throw in candlestick strategy number 5. That's instant course access, detailed instruction. Remember we said that what we shared with you today was just a setup technique. We didn't talk about all the other pieces of the puzzle. Well, all the other pieces of the puzzle are included. The entries, the exits, the stop, placement, conservative, aggressive trading, signal alerts, add-ons to change the colors red and green, as well as access to my personal email. Now, if you purchase these just off Pro Trader Strategies, that's our sister site. They market and promote all of my courses and strategies. If you purchase them separately, it would probably cost you close to $3,200. But because we're going to be offering a special discount because of all the attendees today, we're offering 2 special things. Firstly, we're dropping the price down to $24.95, and as well, we are offering payment plans. So we realize $24.95 may be a lot for you to come up with one lump sum. That's okay. What you can do is talk to the good people at Pro Trader Strategies, and they will construct some type of payment plan so you can come up with a small deposit and start using this as early as today if you'd like. Okay? So there's lots of great ways to apply all of these. Remember, you've just seen tremendous, tremendous results as recent as today. So we're not trying to cherry pick things that happened 6 months or a year ago. We've shown you charts and stocks that happened within the last couple of weeks. We've shown you charts in the currency pairs in the last month. We've also shown you E-mini that happened yesterday. So here's how to take advantage of this great offer. Once again, as well as the payment plan. As I stated, Pro Trader Strategies handles all of my marketing. They do all of my referencing and promoting for my courses. You can email them at the email address there, trading@protraderstrategies.com, and any one of their trading consultants will be happy to set you up with a payment plan, or you can call them directly at area code 310-598-6677. Now, if you look in the very bottom there, that's the link. You can just copy and paste that. It's not a live link, but you can copy and paste that onto your browser, and it will automatically take you to the sign-up page. So if you want to take advantage of that 2-for-1 discount immediately, go copy and paste that, and you can just sign up immediately, and it will have you up and running in a matter of moments, okay? Now, I want to thank you for holding off on questions. I will open up the question and answer box. I will leave this page up here so that you can see this, and you can call them or email them and ask them questions. But remember, this special 2-for-1 attendee special, as well as the payment plans, is only good for a couple of days. So if you really want to take advantage of getting a free strategy along with the Pet D, please don't waste any time. This only is going to be good for a couple of days, okay? Let me open up the question and answer box. Let's see. Is this webinar focused on the May event? Well, no. If you're talking about the May event, no. I'm going to be speaking about mainly futures in the May event. I'll be talking about something entirely different if that's what you're talking about. The May event in Las Vegas, if for those of you who may have joined us a little bit later, that's a great event. Once again, it's a trading boot camp. It's going to be held May 11th and 12th in Las Vegas. and there are going to be 7 expert speakers, and I'm going to be speaking about the futures markets, just specifically the futures markets with an entirely different information and tips and techniques. Once again, if you're interested, contact Pro Trader Strategies. They can set you up with the link, and also they can get you included in that 75% discount off of the price. Okay, so it's a great way. Plus, I'd love to meet each and every one of you at the conference. I know we've only been able to speak over the internet like this through having you typing in questions and me answering them, so I would be more than willing to take time and have a drink or even lunch and speak with you and talk with you and go over any questions that you may have in person. So that's the May event, which will be something entirely different. Okay. Let's see. Can you give us the sell and buy signal with candlesticks? Well, Ruben is asking, can I give us the sell and buy signal with candlesticks? Well, once again, that's what we went over today. Basically, it works on any candlestick. We just went over today, we were just looking at bullish and bearish engulfing. But if you're taking one thing from this, Ruben, if you trade candlesticks, rather than try and pick bottoms with a candlestick reversal pattern or pick tops, just be in sync with the trend. So if you see that the market is moving higher, do not try to pick a reversal pattern thinking the market's going to go lower. That may work every once in a while, but over time you won't really have any consistency. Only take candlestick formation setups that are in sync with the trend. Now, many of you say, well, I don't have anything to really tell me what the trend is. I showed you a lot of examples where the market virtually went sideways and it looks as if there's no trend. But the PET-D is such a great tool, it will tell you even in sideways markets what it discerns the trend to be many times. So that is the beauty of this 2-for-1 attendee special. Let's see. Punil asks, is S4 with no more bars same as S5 in candlesticks? I'm not really sure if you can go into detail with that. I'm not really sure what you mean by that, okay? Mahmoud, hello. Yes, hello. We have people from all over the world here. People from Saudi Arabia, people from Switzerland joining us, and thank you. It's great to see all of you. Robin has asked, she's asking about something she purchased with us. Robin, once again, remember, Pro Trader Strategies is in charge of all purchases. If you're having difficulty seeing it or it didn't, you didn't receive it correctly, just contact them, and they have on record whether you purchased something or not, or whether something was charged your credit card, and you will be issued everything. And remember, what we have at Specialist Trading is not something that it's only good for 2 weeks and then it expires. Once you become a member, you're a member for life. Okay. DT is saying, what are the components of the PET-D? Well, since the PET-D is a proprietary algorithm, the only thing we really want to share with people is that it's based off of momentum. The reason why is because we may have plans to actually license this in the future, and if we do, you know, we don't want people stealing it or giving away all of the rules, because then pretty much we'll just see people copying it and sharing it with and selling it themselves on eBay. So we've kept it proprietary. But if you're interested, you can contact the people at Pro Trader Strategies. They can go into more detail. I'll show you some examples. As well, you can do a Google search on us and look at all the people that have applied it and see how much it's helped them. Now, I personally have been using this for over 30 years when it was introduced to me on the floor. So I wouldn't be using something if it didn't work for me. In fact, it's helped me to be very consistent. Now, the one thing that people are always concerned about with the PET-D, they say, well, Steve, is there going to be an upgrade? Does it change? In the 30 years I've been using it, we've had maybe one alteration. That's it. So don't worry about you know, it being upgraded in 2 months and then you have to purchase something different. We haven't done that in 30 years. So trust me, it's the same formula. Okay. Let's see. What are either the rules? In other words, Doug is asking, if both the last 2 bars are the same color, then the last bar must also be the same color, thus making the 2 bars part of the rule redundant. I'm not sure what you're saying. In other words, I think what you're confusing is you're looking at the color of the candlestick. In other words, if you have a bullish engulfing, okay, that's not enough just to take the trade. You have to have the PET-D. And so what we're saying is, someone would say, well, since that's a 2-bar pattern, do both the bars have to be colored green then? And all we're saying is no. The only thing you need is for bar number 2 to be colored green. If you have both bars colored green, even better. But all you need is for bar number 2, and that's it. We don't concern ourselves with the colors of the candlestick. So we have a special way for setting it up so that you can see the color of the PET D overlaid over candlesticks, okay? Tim asked, does the PET D work on all platforms? Good question. The PET D works with TradeStation. It works with MT4, Metastock, and let's see, and NinjaTrader. Now it also works with Thinkorswim, but there's just a small editing that you must do in order to work. You must use, I believe, a NinjaTrader platform associated with Thinkorswim, but it's all free, and we can help you set that up. There's no extra cost you have to get for that. So you're able to do that if you're a Thinkorswim user. So those are the 4 main platforms, okay? And they are TradeStation, they are NinjaTrader, Metastock, and MT4. Now, one thing I just noticed on the side there, if you looked at your GoToWebinar column there on the far right, under the chat box they have posted a live link. So we see that a lot of you have been interested in going right to the sign-up page. What you see in front of you under the More Information page is something you have to copy and paste. But if you go to the chat box in the GoToWebinar page, all you have to do is simply click that on. It will take you automatically there. So you can take advantage of that discount for the next couple of days. Stuart asks, is this system, I assume you're talking about the PET D, based on institutional or financial interest? That's a good question, and I don't say this facetiously, but it has absolutely nothing to do with those categories. In fact, it's been my experience that institutional and financial interests and things of that you rely on for trading signals only stand in the way of your success. In other words, there are outside sources that you're using to discern what you should be doing. In other words, I know there's a lot of webinars and instructors that say we have to follow the institutions, or we have to find out what's going on with the financial markets and news. That's one of the best things about specialist trading. My mentors taught me not to concern myself with those. If I am investing in my IRA for the long term, definitely I have to know what's going on with those categories. But if I'm trading for something, holding on for 2 weeks to a couple of months, there's no reason to. We saw news events happen where the PET D knew in advance to be long. It was in an uptrend before the news event even came out. Yesterday, the market took off like crazy. Well, on Friday, the PET D, along with one of our strategies, generated a buy signal. We didn't know the market was going to go up 200 points yesterday. It's just most of the things we see are in the price, and the only trouble is most of us have not been taught what to look for. I know I wasn't until my mentors took me aside. So that's what I do. I take everything that I've been taught and teach all of my students. So we don't overcomplicate our trading. As you recall, in the opening statements, I said simplicity equals consistency. And the way most traders trade is by overcomplicating their trading, by following institutions, by following news, by following too many indicators, by listening to too many chat rooms or trade rooms. And then by the end of the day, you haven't any clue about what you're supposed to do, so you rely on someone else to tell you what to buy, what to sell. We feel it should be the opposite. Let go of all those things. Discard them, because they only stand in your way. If they really worked, 80% of all traders would be successful. But the numbers just don't add up. So once you start letting go of those and rely on listening to the market, that's when you start to become more consistent. So we don't at all listen to institutional or financial interests at all, okay? They only serve to, I haven't looked at those things in 30 years. So I'm still here. Let's see, can it be used for TradeStation? Yes, in fact, I use it on TradeStation as well. DT is saying, Steve, can you license PET D to Thinkorswim, please? I'm sorry, that may be in the future, and if it is, I'll be honest with you, the price would probably triple. So if you really want to take advantage of this before we go into any type of a license agreement, because we have been approached, I would honestly take advantage at this discounted price, because once again, we're also throwing in strategy number 5, and these are not things that expire after a year. They're yours for life. So, you know, someone who maybe a year or two down the road decides to you know, license this with us, if we go that route, you're going to have to pay every quarter, and it's going to be a lot more expensive. So we strongly urge you to take advantage of this discount price now, because not only is it discounted, not only do you have payment plan, but it's yours for life. Nothing's going to change. As I stated, since I've started to use this, we've only made one minor alteration in this. It's very minimal in 30 years, okay? Kevin asks, will I be teaching something new in Las Vegas? Yes, it will be entirely different. Not that it's any more or any less advantageous. It's just, you know, a different way to approach trading specifically only futures. So once again, I would look forward to meeting any and all of you, or as most of you I could. I would love to talk with you and spend as much time needed just to sit there and personally talk with you about any questions you may have. If you get an engulfing pattern on one time frame, will there automatically be an engulfing pattern on another time frame? Good question, Kevin. And the answer is we don't care, because that, once again, is conventional wisdom seeking to overcomplicate our trading. In other words, we've always been taught by conventional wisdom that you look at the higher time frame to tell you what to do in the lower time frame, and that's how you get true consistency, and that's how you get confirmation. Well, I haven't used that method in over 30 years because I found no consistency in that either. Now, we have many students and members who do swear by that, and that's fine. I don't dissuade them and tell them not to do that, but do I teach that or recommend that or require that in all of our techniques and strategies, upwards of 10 strategies? No. I just always say the same thing. Trade the chart you're looking at. If you get a bullish engulfing pattern on a 5-minute chart and it's confirmed with a PET D, that's all you need to know. I don't care what the daily chart is doing. I never look at the higher time frame. If I'm trading a daily chart, I don't care what the weekly chart is doing. For some reason, those have only served to, that technique has only served to keep me out of good trades, because I'll wait for them to be in sync, and by the time I wait, I just missed out on a good trade. And once again, if you want to use that, that's fine. But if you're asking me personally, do I teach that and do I use that? No, I used to, and it didn't, once again, give me the levels of consistency what it had promised. So once I let that go, I started to get some nice trades. So my recommendation is only trade the chart you get a signal on. That's it. Let's see. Once again, if you are a member and you're having trouble receiving something from Pro Trader Strategies, Robin, just kindly contact Pro Trader Strategies. There's no problem. There's probably something that was just a miscommunication, and they'll have it right over to you. Okay. I don't want to skip any questions, but I think we might have covered most of them. Earl asked, just got in. Will the recording be available for later viewing? Yes, it will be. Okay, so don't worry. We do have recordings. Contact Pro Trader Strategies, and they will send you a link. Venkata asks, what does it mean by hollow versus solid filling candles in each color? Okay, that's a good question. A hollow candle, the way we presented it, just means an update. It means the close was higher than the open. Okay, that's what it means. A solid black candle means a down day. It means the open was higher than the close, or the close was lower than the open. So when you see dark colored black, in other words, just black or full dark bodied candles, that means that there was a down day. You opened and closed lower. And when you see hollow candles, where they seem transparent, it means you opened and closed higher. So one was an up day, one was a down day. Now what we want to do is apply the PET D to those to give them either a greenish hue or a red hue to tell us what the trend is. And we tell you how to set that up on NinjaTrader, TradeStation, Metastock, and MT4 so that you can see it just the way I showed you. Okay? It looks like that's all the questions we have. In closing, this is a great, great special. Trust me. You know, we've had such success with this combo that we've raised. This is the third time we've actually raised the price, and we'll probably raise it more because so many traders, you know, trade with candlesticks, and now they've got that level of consistency they've been searching for. So we're not trying to pressure you, but trust me, if you want to take advantage of this, this is a great price, a discounted price. Plus, you can take advantage of the payment plan. We realize that it may be difficult to come up with that large lump sum, so just arrange a small deposit with the people at Pro Trader Strategies, and you can be up and running really quickly and start looking at all the information, start applying all the buy and sell signals as well as the PET D. Okay? Remember, simplicity equals consistency. If you're not getting the kind of success and consistency you're looking for, most likely you're trading the way I used to trade. Tremendously overcomplicated. Okay? My mentors taught me something that has stayed with me forever, and it's basically, they said, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. Anyone can add tons of indicators. Anyone can listen to every news event. Anyone can go to all the trading rooms and chat rooms and read all the books. It doesn't take a really advanced trader to do that. You can be trading for 2 weeks and overcomplicate your trading. But it takes tremendous amount of discipline and power to simplify your trading. But once you do that, that's when you get onto that road to consistency. So not only is this a course where you just get, the buy and sell rules and the buy and sell arrows and the pet D, you also get 38 years of experience as a mentor. I'm there with you every step of the way. You can consult with me and I can fill you in and make sure that you're on the right path. So you're getting all of this included. So if 2015 isn't starting out the way you wanted it to, if you're not as happy or where you thought you'd be by this time in 2015, please take advantage of the special offer we have for all the attendees today, where all you have to do is purchase the Pet D, and we're throwing in one of our most consistent strategies for trading candlesticks. That's candlestick strategy number 5, okay? In closing, I just want to say thank you so much for attending today. Also, if you want to know more about the Trading Winds conference that we're going to be having, that live 2-day event, I'd love to see you all there a month from now in Las Vegas. Contact Pro Trader Strategies. Remember, 75% off the ticketed price. So they'll give you the information for that as well. I want to say thank you so much for attending. I hope you got something out of this presentation today. And in closing, I look forward to all of you becoming students and members of mine at Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.